Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone. Can you all see my screen and hear me? Perfect. Thank you, Bill. Let's go ahead and get started. So as we usually do, let's start with looking at a daily chart, which kind of gives us the picture, at least in terms of the last big consolidation into the March 2020 low and the move up off of that, which Garrett and I lean to being complete as all of the primary wave 5, although there are some charts in individual sectors that we look at that do have a greater chance of getting one more high. For most things, this consolidation was too big and too deep to reliably be a fourth wave still inside this move. So while we are looking at a more significant top having been struck, we are still looking for higher and a bounce. And there's a lot of overlap between what we're looking for here. And I think Avi has the same count on his charts, looking for a B wave to hold support sometime soon. We'll look at that in more detail, either getting a drop lower to complete or maybe bouncing more first and then getting a drop lower. And we'll take a look at those two scenarios, but then getting a swing move up towards the 4300s, maybe even getting past 4400 as the C wave of a wider and higher parentheses B wave. Now, the thing that we do have to remember is that I'm going to switch to the weekly chart for just a minute. And the weekly chart shows the larger degree potential with the primary wave 5 that we were just looking at, right? We had that same circle 3, 4, and 5 into the December 2021 or January 2022 top that was struck, and has that as the fifth wave, the cycle degree fifth wave of a super cycle degree wave 3. And then the potential that we are just embarking in the very beginning of a very large multi-decade ABC cycle degree ABC consolidation for a super cycle degree wave 4, which has its degree correction as the 1929 to 1930s consolidation is the super cycle degree wave 2 that this would correspond to. So a pretty big magnitude consolidation that takes us down most likely below the 2020 level for just the A wave, and then even closer to the lows, at least this region where we had the primary degree wave 1 and 2 and intermediate 1, 2 of primary 3 off of the 2009 lows for in the 1000 region for our longer term model. That, as we've talked about before, that's the cycle degree wave 4 inside this super cycle wave 3. But this would be, I'm going to zoom out to the 2-week here so that we can see this cycle degree wave 2 here, or wave 4, sorry, the cycle degree wave 4 inside the parentheses super cycle 3. Was the dot-com burst and then the 2008 financial crisis with a nominally higher high B wave made in the S&P. And that is a big, wide, expanded flat. We're looking for potential for this to be very similar. So relatively speaking, even though this is kind of a devastating move to the downside over possibly the better part of 2 decades, relatively speaking, it would be a much higher and more shallow consolidation than what was seen in 1929 to 1933s. So that would fit by rules of alternation there. But since there is that larger degree potential of this bigger drop starting, ideally, while we do want to see more of a B wave, we do have to approach everything, particularly when we're looking at upside in the market, with this in mind, even though, yes, we can get higher in a B wave. Yes, we could even still get an alt higher high in the fifth wave, bringing this top up 1 over. Probably at this point, it would only be nominally higher than we saw at the beginning of the year, so maybe only around 5,000 or 5,100 if we do get it at all. But we do have to be on the lookout for more of those black swan type events. So we go back over to this chart, we can see that I have an alt red parentheses B wave here. That would be based on getting a more normal ABC move down for the parentheses A wave, even though I don't have it on the chart. The bounce up into the August high as a 618 retrace for the B wave, even though it was a sharp three-wave move instead of a wider flat, and then a possible move down that could count as an ABC or could even count as 5 waves down for the possible wave 1 of this C wave already from this top. And this 3-wave move up that we're counting as our A could still be a red wave 2. I don't have that on the chart. It's implied. I have it on some of the smaller degree. But that's why it's so very important that we're looking very closely at how we're filling out as support for this B wave, and we're being very cautious in our approach for trading that swing move up in the C wave, because we have not been able to eliminate the risk of this being a red 1-2 start to a C wave down. I also have this yellow B wave here because it is possible to even count this as all of the B wave off of this A, but I think that is less of a concern based on the size of this move is all of the A wave, and the move that we got up looking more like it is just the A wave of a wider and higher B wave if this is our A. But when we zoom in and take a look at this structure here, you'll see that potential risk, which I think I have it filled out more on this chart. Yeah, here we go. So this is the chart where I have that possible risk of a bigger decline. I haven't updated it in a while. That this would really need to get a bounce and then lower for that A wave and then continue to fill out as a diagonal. But that is the most bearish path that I can see at the moment. I would be counting this because of the subwaves. It can be a leading diagonal, so this could be an impulsive move down. But I would lean a little bit more to it being a diagonal structure, where this is an A, B, and a C wave. And so this would be an ABC, get a higher bounce for 4, and an ABC move down. So that is the biggest risk that I see at the moment. But we are really looking at the structure since the beginning of December as being an ABC consolidation, ideally bouncing just in the 4th wave of the C and getting one more drop lower into the mid 3700s to complete all of this A and B structure and setting up for a swing move higher towards the 4300s to 4400 region to be that larger B wave bounce. And that fits with a lot of things. The only alternatives that I'm looking at as far as that B wave are concerned is that if we start to get more than just a 4th wave bounce here, this didn't, even though we got pretty close to a 50% retrace, this seems a little bit small to be all of our B wave. So if we do get more than this wave 4, so that would pretty much be over 39.25 over to 39.30, then I would be treating that until it clearly gives us 5 waves up and 3 waves down as a 1-2 start to the C wave up. I would be treating that as just a B wave bounce before setting up for a drop deeper in the B wave, shown here as the purple structure. So this may be moving the A wave over to this nominal higher high here instead of counting that as the B wave. And then this is just the new A, and then needing a B wave and a C wave down. There's a couple of the individual sectors that Garrett and I follow that really support this as the more ideal. But again, if we're going to hold here, maybe one more high tomorrow morning or overnight as a micro fifth of the C wave in this ABC move for a 4, and then start to drop down towards the mid 37s, then most of those things are probably going to get dragged down in a similar low, and they'll be more in a reliable fib support region to count as all of this B wave. And then we can start to look for those micro signs of a reversal for the C wave up. That C wave up, all C waves should be 5-wave moves. So let me get rid of some of these fibs here so that we can take a look at what that should look like. So that ideal would take, if we're going to say we're going to base this on bottoming right around 3750, then we'd be looking for a move up towards about 3980 to 4000 as wave 1. And we want to see that as 5 waves up. So what we can start to look for from this 3750 region, if we have a nice 5 waves down, there's always the potential that that can extend a little bit more, but we start looking for the smaller degree clues from that lower low that this 5 waves up as wave 1 of the C wave is starting. And we want to see at every step of the way that we're getting that confirmation. So our ideal is that the C wave should be 5 waves up, and I have that outlined as 1, 2, 3, 4, 5 at the minute degree. So then we can look in closer detail at this wave 1. We can say we know ideally the region where this should target based on the Fibonacci pinball for that C wave up at minor degree, and we can say this should be 5 waves up. And so if this is going to be a normally proportioned 5 waves up, then off of the low, we want to see that first 5 waves up for wave 1 target this 3850 region. And so then we can say, all right, well, if that's going to be, if we want to see wave 1 of this wave 1 of our C wave target the 3850 region, then we can zoom in even more and we can say, all right, that wave 1 should look like this. We want to see 5 waves up there. So that means our first little move off the low, we want to see a micro 1, 2, 3, 4, 5 waves up to about 3780 if we're going to bottom and turn from that 3750 to 3740s. Then this is going to be what that first little move off the low would need to look like to give us the most confirmation. And so then we just continue to build from there. And that's how we look for the smaller degrees to confirm what we want to see at the larger degrees. And we can start to say, okay, we have a pretty good looking A, B, and a C wave down into a high probability of support. So we can start to tranche into some long positions based on this support region, looking for that larger swing move. But then as we start to get those smaller degrees, then we can say, all right, we have 5 waves up and 3 waves down. We can add a tranche and use this as the stop. We have this 5 waves up. Maybe we trim a little bit of this tranche that we took here, but then we get 3 waves down holding another higher low. Then we can add that back and maybe a little bit more using this as a stop again. Then we fill out the rest of this 5 waves up, take a nice chunk of profit because we are still in a corrective move within a bigger bear market, and look for that to hold the next degree wave 2 to another higher low to give us even more confirmation that we have 5 waves up, 3 waves down off of this B wave low as a solid start to the C wave. We can add back all of what we trimmed and maybe even a little bit more, again with a stop at this low, and move up all of our previous stops to that low, and maybe some things off of this low. Then again, we would look off of that wave 2, and we want to see this be 5 waves up for wave 1 of the third into a proportionate move based on what we would see for the size of this, and the fib projections for this circle, lowercase Roman numeral wave 3, that's minute degree. So we'd want to see the minuet 1, 2 hit approximately that 0.38 to 0.50 inside to give us the good Fibonacci pinball structure that further gives us confirmation that we are getting that swing move. So really, we're not, that's the ideal, but because of the bigger bearish potential that could really fall apart if it's not going to follow through ideally, if we start to get things that look more corrective up and don't hold that 4, that's the first big opportunity to get very defensive and be careful, because while this might still be the B wave and it might be trying to fill out a C wave up as maybe an ending diagonal, a choppier overlapping move that takes a little bit longer, there's a very big risk that this is still that wave 1 and wave 2 in red, and that any move down here that gets only a corrective bounce here could start to drop pretty precipitously, especially if whatever low breaks here. So there is that potential that, you know, we'd be filling out a deeper B wave, but that would be more of an alt, unless, you know, that this is going to be my primary if we get more than this fourth wave here. But if we fill out this B wave and then only get a corrective bounce, this is going to be a less reliable alt from there. That's going to be switched to brightening up this red wave too. And so that's how we sort through those different potentials, and be aware of the different potentials, but have, you know, one thing in mind is what's our primary move that we think we should see, and then what do we need to see along the way to confirm that. Wanted to take a quick look at the NASDAQ before we move, and then also the Dow. Oops, here we go. All right, so the NASDAQ gave us a significantly higher high even on the cash NASDAQ as our B wave, and is filling out very similarly, but already hit a 618 retrace. And that's not a problem, because, you know, B waves also tend to be pretty deep and wide, especially when they're wider flats. But there are some of the things that Garrett and I are looking at in the tech sector, where, because this was so small, relatively speaking, to the move in the S&P, this might actually be a smaller degree A and a B wave inside a bigger A, and then they get another B and a C wave up that lasts a little bit longer, maybe when the market's getting a wave 1 and a wave 2 in the start of that C wave down. So just something to be aware of. There's a few things that we added recently as wave setups where they look very much like a smaller A and a B, and they should get a similar swing move, but that might not actually top all of the B wave. That's going to be what we're going to consider as the primary count for the NASDAQ as a whole. But for some things, we might start to look for them to hold another B wave over here, and then get another swing move up from there, lasting, you know, more into 2023. And next, wanted to look at, oops, YM, the Dow. Of the major index charts, we'll look at RSP in just a minute, but the Dow counts a little bit different from the rest of the index charts. It did not make a lower low on October 12th, so it counts a little bit differently up, either as 1, 2, 3, 4, and 5, or as A, B, and a muted C wave. Both are perfectly valid. As a C wave, it got to a 76.4 extension. So that's not so muted, even though it looks pretty small, relatively speaking, just by the look of it. So either way, it's perfectly valid. It also looks like this should be more than a fourth wave already and getting a B wave bounce, but it doesn't need so much more. I would like to see it come down to a lower low, whether that is just a fifth wave down of an expanded flat, maybe similar to the rest of the market, or just a muted C wave for that move down. But while this could be a B wave, it kind of got high enough already that if it's a B wave, this should have been all of the B wave. So it also, even though it did get to a 618, because of the way it counts better as a diagonal, it does have a little bit more potential than some of the other major market index charts to make a higher high in that same C wave. So instead of the C wave here counting as the parentheses B, not getting a higher high on the NASDAQ, and maybe getting close to it, but not quite on the S&P, or getting hung up in that 4,400 region on the S&P as a normal B wave should, the Dow can make a higher high closer to the 40,000 region to top its primary wave 5. And that does fit with some potential also in the RSP chart, which is the equal weight version of the S&P 500. We do have a significant risk that this was all of the primary wave 5, and this did drop deeper than ideal, and relying on a WXYXZ for the fourth wave is really not the most reliable. But because of where a 100% move projects, even if we do get that lower low towards the 136s, 137 for our B wave, similar to getting the fifth wave down that we were looking at in the S&P, a measured move for this C wave takes us pretty close to the prior top. So I have this, pointing to the 764 as a B wave retrace is only a 61.8% move for the C wave. And we tend to see most C waves get closer to a measured move. So a measured move here, or maybe an extension past a measured move towards a 1236, is just easily that purple wave 5. It doesn't mean that it's a breakout and we should rely on it getting significantly higher than that. It's just something to consider that the same move that we're looking for and everything else might actually succeed in getting that higher high closer to the 170s in RSP. And that makes sense that the RSP and that the Dow would have that look a little bit more so than other things, and also some of the 22 names for 2023 that Garrett and I picked out for stock waves, a good number of them do come from the Dow. I'd probably say at least like 6 or 7 of them. So that's a pretty good amount. All right. If there are no other questions, I guess we can look at the Russell real quick. The Russell, I have a little bit of a different count. I think that the October low in the Russell was the B wave, and that this move off the low looks more like 5 waves up to me as a large wave 1 in what's going to be a stretched out C wave. Not so stretched out as far as C waves go. It's only pointing to maybe a 1, 2, 3, 6 extension. Even though this looks like 5 waves up, I'm treating this as a diagonal. An overlapping 5, 3, 5, 3, 5 diagonal is what I'm looking for, which is not the most common structure, but I think it fits with the price action that we've seen. This might have been all of that C wave of wave 2, but again, there is the potential that this does count as just 1, 2, 3, 4, and gets a 5th wave of C closer to the 1700 region. It is not needed as much on the Russell as it looks like it is needed on the S&P. So that is something certainly worth considering. I'm not quite ready to snap that in place yet, though. All right, let's go shift gears a little bit and take a look at energy. Again, if there's no other questions. I'm not sure I like this count in oil. This is not what I've been following and posting more often, but it is certainly something to consider and seems to fit more with the UGA, the gasoline fund, and also really does fit very well with what Garrett and I are seeing in a lot of energy stocks, where this is just an awkward B wave, and this looks like 5 waves down and is working on a wave 2 bounce for a C wave. And that could be 1 degree smaller and still be the C wave of this larger purple wave 4. The thing that I've been posting more often that is getting really messy goes back and counts this as the wave 2 off of this B wave here in a weird WXY, where this is an A, B, and working on an ending diagonal for the C wave. And I got to that because of what Garrett showed one day in USO, where that count works really well. I have not checked back in recently with USO, but I'm starting to lean more towards this on oil just because of how well it seems to fit with most of the other energy stocks that we see, that the vast majority of them are still implying that the downside is not done, and really this next leg is only just getting started. So if we're going to switch over to USO real quick just to see, and again, I consider USO as a trading vehicle for oil exposure. and I would sooner trust the subwave counts on spot oil or oil futures than I would on an ETF like USO that is derivative based and also has a different subset of investors. So that, with that being said, we can hop over here to USO, and we can see this similar potential 5 waves down from this B wave high, a little bit large, and maybe this counts better as an A, B, and then kind of a muted C wave of a diagonal. But this certainly allows for a lot more downside to be starting to fill out after it tries to bounce a little bit more in this wave 2. If it is an impulse, then the third wave should target 51, and then the fifth wave of C should target down here to 47 on USO. If this is a diagonal, then though, this can hold in the 56 to 53 region. This fourth wave can bounce higher, and then we can still hold the 52 to 50 region for that fifth wave of C. So a lot of this is really up in the air. I mentioned that UGA, it's something that we do take a look at from time to time in stock waves. It looks more like that diagonal, where this is 3 waves down for wave 1, working on the wave 2 bounce. So not as much of an impulsive sharp drop for the third. That should be an ABC move, not quite as deep, and then a higher bounce for wave 4 that may or may not actually overlap the top of wave 1. And then the ideal support for UGA is right around here in the 40 to 37 region. Now, looking at natural gas, let's see if it'll let me. Nope, gonna have to trick it. Let's go over to, there we go. I do not have data on WTI. I track the CL crude futures. So natural gas, I think this was a major top that just happened to get an awkward extension to a higher high, and I don't really know how best to count that. I have it counted as an A, B, and C, but I have that as another A, so if this is an A, then it might actually be measured off of the higher high. But until it gives me a much bigger retrace, I'm not going to look for any significant amount of upside in natural gas. What does stand out to me, though, in the short term is that while this could have been all of the B wave, similar to what we're looking at in a lot of other energy stocks, this looks clearly like an ABC flat. Now, that could be an ABC for wave 1 of an ending diagonal for the C wave, and I'll go ahead and add that to the chart. Which means that it can bounce in a wave 2 soon, maybe from one more low. And when I snap this in place to the C wave here, it'll magically jump to the minor degree. So this doesn't have much of any wave 2. It is possible that this was all of wave 1 and it's already starting a third. And that might even be an impulse. But again, I don't really think that's as reliable right now. At least not for me, and this really does have more of a look of an ABC flat, so could see a bounce to the 650 region, and it could even be a ABC flat for this purple B wave and try a C wave up towards the 8 region again as a wider version of this B. So those of you who are scalpers, that are really good at trading the natural gas futures, there's a lot of potential back and forth there. Just please be careful not to get whipsawed. I don't have a lot of conviction either way. Those are just the different potentials that I see. I have not looked at the UNG chart in quite a while. This is that higher high after what looked like a complete move. I was only using this to trade some options, comparing it to my actual natural gas chart. So off of this high, this could be that same A, B wave, and this looks a little bit weaker here than it does in the futures. So I would be a little bit more concerned on the UNG chart that this is already the 1-2 and starting the third. It looks a little bit less like that, like just an ABC flat for that alt for that wave 1 or the purple B wave, and looks more like this is the 1-2 and it's the start of the third. Now, this doesn't look like a clear 5 waves down though, so this could easily be an A, B, and C move down for that C wave, and then the higher bounce for the wave 4 in a diagonal for the C. But that is what U and G looks like. All right, Jonathan, looks like your question goes back to the S&P. Avi has his yellow wave 1 as an ABC subwave count to count 3,500 is 5, and then this. Not exactly sure what you're trying to ask, Jonathan. I think if again, similar to what we looked at on the RSP and on the Dow chart, because of the size of this move, if we're going to still count it at this lower low as the fourth wave, first of all, it has to be that WXYXZ, and I think this looks better as the fourth of a diagonal. And so I would be looking for this to be an A, B, and a C wave move. This might be the A and the B wave, and then it gets a C wave up to a nominal higher high. Or the ABC, like we were talking about in the NASDAQ, is just the A wave, and it gets another B and a C wave to a higher high. And that just fills out more of that A, B, C for the B wave in the NASDAQ. Certainly a possibility, but it's not something that I would heavily rely on. I would be much more concerned with whatever the count is, the risk of, you get a 5 wave move up into the 4,400 region, and that is easily all of a B wave setting up for a big drop. So you play defense from there, and if you get a quick 3 down, then you can go up and bat again. But the risk of that turning down in a major way is too great to say, well, this could be part of this bullish pattern, and rely on that significantly without seeing very clear evidence from the subwaves. All right, let's move on to gold. Nope, this one. I don't count a clean 5 waves up, but we can count 5 waves up in gold. The problem is the 5 waves up is a little bit too small to be this wave 1 of our primary wave 5, and too big to be 1 of 1. So what I think works better, and what fits very nicely with the minors and other things that we're looking at, is that this is just the A wave of wave 1, and that the entire primary wave 5 is a diagonal. And I know some of you are going to be like, oh no, don't say that, I hate diagonals. But the nice thing about the commodity that a lot of our miners are linked to, being a diagonal that could take the better part of 3 to 5 years or more to fill out, is it gives us a lot of different swings to the upside and corrective consolidations to support, that in a lot of time over a nice level, say 1800, where almost every mining company is producing some nice profit margin. So I do like that filling out. Whatever this is, it looks like 5 waves up, and it should get more of a retrace, whether that is a B wave or a wave 2 of whatever degree, would ideally come back into the 1730 to 1700 region for gold. Jonathan, I'm not sure. I'm not exactly sure what you're asking. I approach all of my analysis of looking at risk skew. So, I'm not providing specific trading guidance, but trying to assess things in terms of where the bigger risk is and eliminate that. All right, moving on to silver. That's not an updated tab. Here we go. Silver, very different from gold, both at numerous degrees, really. This larger consolidation in silver counts better as a primary wave 2 to a 618 retrace, not as a fourth wave. So there is certainly potential for silver to be starting a move where it can outperform significantly from gold. It does have a couple of higher lows where gold made lower lows in September and October. And that makes it count very, very differently off of that low. Because of those, the structure though, either you can call this a truncated bottom and then just count 5 waves up, in which case you have 5 waves up complete as wave 1 and should see more of a retrace as wave 2. Or if you're going to use the actual low from the beginning of September, then you have an ABC move up for wave 1 and of a diagonal, and should see a wave 2 and then 3, 4, 5 for that larger wave 1 as a leading diagonal. The alternative is that this was kind of a muted C wave. And so this is 1, 2. This is A, B, C for a third. And then we can get a fourth wave retrace and then a fifth wave up. And at that point, it's unclear whether this is starting to get too big to be wave 1, but it's just big enough where it could be all of the parentheses wave 1. So that really doesn't change the longer term the way that we would approach this, whether, depending on the degree. It just, if it's the larger parentheses 1, 2, then the parentheses 3 would target up here to the 45s. If it is just a bigger 1, 2 of a parentheses wave 1, then that might take it closer to the 36 region, which is really past the ideal fib where you want to see wave 1 stop. So we would probably lean a little bit more. Maybe I should make this 1 degree bigger. There we go. That would probably fit a little bit better if we do hold as a fourth and then get a fifth wave up. My preference, though, is instead of getting a fourth and then a fifth wave to new highs, we just come down as an A, get a B, and a C wave down a little bit deeper, and then get an ABC move up for the third, and then fill out a larger leading diagonal for that wave 1. Moving on to GDX. GDX really kind of fits the mold very nicely with silver as well. It didn't get the same low in October that gold did, but it did make a lower low at the end of September. So a little bit different. It can also be 3 working on a fourth and get a fifth wave up. That might be a little bit small to be all of this wave 1. So my alternate count would be a little bit similar to what we're looking at in gold, where it's the A wave of this wave 1, but more desirable to me, based on fitting in with the larger structure, would be to get more of an ABC move down into the 25 region, and then fill out more of an ABC up for 3, a deeper 4, an ABC for wave 5 to get a leading diagonal for that wave 1. That, this one. So on the bigger chart, that is working on the start, still this wave 1, inside these parentheses C of a primary wave 3, targeting the 70 region longer term. And that should be a 5-wave move. And again, this 36 to 40 region is the ideal resistance for that wave 1. This is kind of the minimum level. So if we do get 5 waves up, that can be, I have it green. Usually I use green as a more aggressively bullish count. Here, it's not quite as longer term bullish because it might imply that we're only going to get up to the 61 region for this C of 3. But it would be a little bit more immediately bullish in terms of starting this third, which might only get to the 47s to 50 region instead of all the way up to 60, but it would be a more immediate start. So I would like to see, there's a lot of individual names that we cover in the metals, miners, and agriculture service that are a much smaller start off of their relative lows and would benefit from filling out larger wave ones and then allowing for this move to be a much more sustained move to the upside. But again, since we're dealing with a parenthesis C wave here, that C wave doesn't have to be an impulse. It can be a diagonal. And a diagonal should still be 5 waves up. So it's the same 1, 2, 3, 4, 5 at the minor degree, but all of these could be an A, as in purple, a B wave retrace instead of a 2, and then a C wave up for wave 1, the same wave 2 retrace, and then an A, B, C up for the third, the deeper 4, and then an A, B, C up for wave 5. So that's what's implied there by that little purple A wave, which may or may not need one more high versus a more muted version with the green wave 1, or more desirably getting more of a short-term retrace now as A, B, and C for wave 2, and then filling out more of that leading diagonal from there. All right, moving on. First, there was a request to take a look at TLT, but before we look at TLT, I think it is important to look at the 30-year bond. In the 30-year bond, we have a possible 5-wave move up off of what can be a significant, at least temporary bottom for a much bigger bounce. But we're going to approach everything as just being part of A waves, an A and a B wave inside a larger A wave until we get something much more substantial off the low. So in order to project this move higher, we have an initial move down that is not clearly an ABC move. We also we stopped short of our ideal fib zone so far. If we do drop lower, it'll look even more like 5 waves down. So even more so, we'd be looking for a B wave bounce and then a C wave down lower, but need to fill out more of an ABC into this fib zone to have a reliable swing trade higher. So that's what I'm looking for in the 30-year note. I think the 10 years actually also pretty similar. So when we look at TLT, and a TLT I have on this tab that's labeled micro, we can look for a similar measured move. But even though this was actually closer to a 38.2% retrace, and it didn't make a higher high here, so this looks more like a clear ABC move down. Because of the actual 30-year bond futures needing to be more of a B and a C wave, that's going to be my primary view on TLT as well. So instead of projecting the measured move off of here, I'm going to look for this to only bounce as a B wave and then head back towards the 98s, and then look for the measured move to start. If this bounce is a clear 5 waves up and then holds a 3-wave retrace instead of being a micro ABC move, then I'll start to look for this to be heading to the 120s off of this low. But I don't think we're there yet. I can take a look at DX, dollar. I think DX kind of fits nicely with what I would like to see in the metals. Not that we look for any direct correlation, but I would like to see more of an ABC bounce there, which should maybe drag on any commodities that are priced in dollars. So move up towards the 109 to 110 region would be ideal, and then turning down from there in a new C wave, which may or may not stop at the measured move, which is right around 98 from that region. Could easily start to drop a little bit more than that. Any other questions before we end it there? Or I can get this uploaded for you guys sooner if it's a shorter video. All right, well, happy Hanukkah, Merry Christmas, happy holidays to everybody, and I will see you all tomorrow.